Welcome back to Strongman Personal Finance, everybody. I'm on wifey's laptop. Anyway, we're going to react to this interesting interview with Deepwater Assets. Ooh, he's so deep. He's so deep in the stock analysis. But we're going to react to this interview from Gene Munster, like Munster cheese, where the title says, ultimately Tesla needs to improve its margins. Yeah, they do, because they kind of look like a traditional automaker right now. But we're going to react to this interview with this stupid clown, and we're going to hear all the typical Tesla copium and excuses for why Tesla keeps having declining margins and automotive revenue only grew 5% year over year. I'm still bullish, bro. But we got to listen to this peak copium. So let's go ahead and react.
Tesla shares moving lower this morning after the EV maker missed on both revenue and earnings for the first time since 2019. The stock was flat following the release, but took a turn lower during the earnings call when CEO Elon Musk struck a pessimistic tone, saying he's moving through the current environment with a degree of caution. Joining us now.
Yeah, because he knows his grift is about to end.
With more, Gene Munster, Deepwater Asset Management, managing partner. Gene, good morning. I was just looking at the beginning of the third quarter. The estimate for the third quarter for Tesla was, I think, at 84 cents in earnings. The estimate got whittled down to 73. It comes in at 66. A lot of focus on the automotive margins once you exclude those vehicle credits for zero-emission vehicles. So where does that leave us here in terms of the earnings power, how much more they're going to have to deal with in terms of price cuts and margin pressure, and how does it feed into the whole story?
Well, margins are the critical point, Mike, and ultimately they need to improve those margins. Musk was clear, don't expect margins to move higher over the next year as they start to ramp Cybertruck. And so...
yeah, they're probably going to go lower. Tesla is basically a traditional automaker. Look at the percentage of revenues that come from autos. It's still roughly 85%. At some point, people are going to wake up and realize Tesla is a car company. And all I heard the last 2-3 years, Tesla's revenue growth is insane. Their margins are insane. Everybody wants a Tesla. And look what's happened. Their revenue growth, I think, is lower than traditional automakers. Like, I've never seen such a hyped up stock have such terrible revenue growth. And I'm not going to say I'm a genius, but I basically called this, okay? The stock hasn't sold off to where I think it should go, and I think it could go way, way, way lower. But at some point, everybody's going to wake up. Revenue growth rate was 5%. 5%. Before it was 50. Now it's 5%. Margins are lower than Toyota's. Oh, it's the future, bro. Yeah.
Oh, this is really the battleground. This is the center vortex of the whole Tesla story. It's about margins. Margins go up. That means that this is a tech company. Margins go down. It's a typical car company.
I wonder what the trends in margins was. It was almost like during the pandemic, rates were at zero, and Tesla was new and exciting, and everybody wanted a Tesla, and they were willing to pay top dollar for it. But now the luster is starting to wear off. And when the luster wears off, when the excitement wears off, when every other freaking car company's offering electric vehicles as well, what makes Tesla special? Nothing. Nothing at all. Oh, Elon Musk, I'm Iron Man. Wake up, morons.
And so that's why there's so much weight on that all-important automotive gross margin X credits. Now just frame in one other detail there. It was 16.3% in the September quarter. It was 29% a year and a half ago. These margins are now approaching traditional automakers. Now, granted,
yes, they are. I'm pretty sure Toyota's gross margin is higher than Tesla's. Think about that. And Toyota trades at a fraction of Tesla. Something's not clicking here. These things take time, okay? Tesla is a massive, insane bubble. I've been saying it forever, and I will be proven right. I don't care if the stock went up a lot this year. I see comments on my channel, but the stock went up, dumb man. Okay, the stock went up. You know AMC went up too? You know GameStop went up too? Does that mean they were good stocks and good companies? No, they're clown stocks, just like Tesla is.
Traditional automakers lose a ton of money when it comes to their electric initiatives, but they are approaching those lower margins. And so, Mike, what does this mean? It means patience is a virtue.
Oh, so you just gotta be patient. That's all these. I hate these people. They're such scum. They're just like, you just gotta wait. Eventually, Elon Musk is gonna have AI and FSD, even though he's been saying that for like 5 years and more. And they're gonna have Optimus Slime, Floptimus Slime, and everything's. You just gotta wait, bro. Just buy the dip, bro. They all say that. And what keeps happening every quarter? Margins get compressed. Revenue growth rate is massively stalling every single quarter. And Tesla's revenues for autos is a massive percentage of their revenues, and it hasn't changed. Wake up, people.
Elon talked about this being a challenging period. He used that phrase twice in his prepared remarks. He did not talk about challenges in the June quarter. And what essentially the setup here is that investors who believe that this is a tech company, I'm one of those.
Yeah, because you're an idiot.
Have to wait an extra year plus before we start to see some of those margins improve. There was another.
Why, if it's a tech company, why do we care about automotive margins? Obviously, people are looking at it as a car company because it is a car company. Morons.
Layer of disappointment on the call too is Tesla has been steadfast with this 50% compound growth expectation. And
yeah, and now it's 5. There's no 0. 5. That is horrible. I bet you Kellogg's grows faster than that. 5% revenue growth year over. Oh my God, that's just god awful. But trust me, bro, it's gonna be 50% any day now. Rub my nipples on Elon Musk. Where's another employee I can knock up? It's all a scam.
And Elon started to back off with some of that language, saying that it's just impossible to continue to grow at those rates. And
really? You can't grow at 50% forever?
So when we think about Tesla and the story for the next 5 to 10 years, that 20 million vehicle number in 2030 just got a lot harder after his commentary last night. And so,
yeah, with 5% revenue growth for such a young company, they're not going to sell 20 million cars, okay?
That's the near term. It is disappointing. I am optimistic for longer term reasons, but it was not a pretty quarter.
Right, and you mentioned that the margin profile has been trending toward traditional automotive companies. It's not there, but it's getting in that direction. As well as, Elon Musk complains about high interest rates. So they're having...
It's the interest rates, but I think other car companies are growing faster than mine anyway. But it's the interest rates, bro. Yeah, it's not that I'm a scammy liar, pumping piece of trash. No, it's the interest rate. Oh, and it's remote workers too.
Been a cut price to create demand, whereas before it was all about supply constraints and unlimited demand. In other words, the story that got Tesla to an $800 billion market cap is not really there anymore, at least right in front of us, and it trades at 70 times earnings. So it's obviously.
Oh, God. And when I get proven right, I'm going to get no credit. I know how this works, okay? The clowns will just find their new stock, and everybody will just move on, because that's how the clown market works.
Obviously a great operator with all these advantages, vertical integration and everything else, and certainly massive first mover advantage in EVs, but what do you pay for it?
Well, ultimately, I think you probably pay 5 or 6 times revenue, and
5 or 6 times revenue, okay? Most car companies sell for like 0.5 times revenue, okay? They're very low value. Tesla's margins are god-awful. 5 or 6 times revenue? What? And why are we looking at times revenue? That's a clown metric. Oh, well, any unprofitable clown company can have a price to revenue ratio. Why? Because that's what people do with clown stocks, because they're usually not profitable or they have terrible earnings. So now, instead of looking at PE, we got to look at price to sales. That's what really matters. We don't have to care about the profits. Oh, they're approaching legacy automakers? It doesn't matter, bro. It's just a bro.
The question is, what is the revenue going to be in the next 2, 3, 4 years? And this is, I think, where people need to look in the mirror and ask the question, which is, ultimately, where is the world going when it comes to transportation? If the answer is maybe it's an electric world over the next 10 to 20 years, then Tesla's not going to get there. It won't get the bid that to keep this stock going.
I think it's going to be a blend, man. I just don't think everybody is going to all of a sudden go electric. Okay. And I think one of the most electrified countries is China. And there's insane competition there. Okay. Chinese companies are eating Tesla's freaking lunch. They're crushing Tesla. Tesla is a joke in China. It's like, what is there any bullish case for? I don't see it. I don't understand. Please, Mr. Munster Cheese, explain to me.
If the answer is that the world is going in that direction, I think the company is in a great position. And the reason why is that this addressable.
If they have 5% year-over-year revenue growth, you're telling them, oh, everybody's scooping up EVs now because they're at 5. It's the only auto manufacturer that makes profitable EVs, and they grew their automotive revenue at 5% year-over-year. That's insanely bullish. That's great revenue growth. Yeah, I think Kellogg's grows faster than that.
Market. Gets back to your question about what do you pay for this. The addressable market for automotives is massive. If you take the low end, it's just over $2 trillion a year. The high end, it's $2.5 trillion. The smartphone market's about $600 billion a year. So this is 4x the size of that.
Yeah, and Tesla's going to just take all of it, right?
Tesla's got a pole position. General Motors just announced that they're backing off some of their plans to do for their light truck production facility. They basically postponed that by about a year and a quarter. The other automotive makers just are backing off on EVs. And so I think this is the period of where great companies have difficulties. And ultimately, I think that they will come out. I think you pay 5 or 6 times revenue. That's a hardware software model that Apple has.
He's comparing Tesla to Apple. Apple is insanely profitable, and there's huge demand, okay? Apple, everybody can buy an iPhone. Not everybody's going to buy a Tesla, okay? There's basically the iPhone, and there's, the droids. But basically, Apple's got a lock on a lot of markets. Tesla is one car manufacturer out of like 100 billion in the world. This freaking clown thinks Tesla should trade at the same multiple of sales as Apple, which is insanely profitable. And it's a giant company that people love. What an idiot. I had to react. I was like, what? Tesla's basically Apple, bro. Yeah.
And where does that get you to? They'll do call it 25 billion in revenue next year. That probably goes to 500 billion over the next several years, and you can kind of fill in the.
Yes, with 5% revenue growth year over year, they're totally going to have $500 billion of revenue. I can totally see that, yeah. That's like double Volkswagen, double Toyota. Yeah, 100%, bro.
The multiple there.
What a moron. Anyway, I just had to react to that video because, look, Tesla is going to be a clown stock for a long time because it's always about, well, just give it time, bro. And all the fanboys and all the clowns will keep buying the dip. Just wait, okay? If you want to buy Tesla, you go right ahead, okay? You own it in your index. You own it in VT. You own it in VTI. Why do you need to take the extra risk to buy this company that's trading at the same multiples as Apple, which has like 20, 30% profit margins? Seriously? Are you people this stupid? Anyway, that's it. Have a wonderful night. Cheers.